Hey guys, good morning. What's up? How are my bulls? Sunday recap here for you. We're going to really crush it this week. Last week was a good reminder of errors that can be made, in my case, particularly in Bitcoin. However, we hung strong, and I've got some great analysis for you today. I think this coming week is going to be a very profitable week, and I have some reasons why. I'll show you here, but first, come on, get with it. Go to the Ever Bullish podcast at www.everbullish.com. Pull this up. While you're doing that, I want to say happy Father's Day to all the fathers out there working hard. Happy Father's Day to all the fathers out there trading for more money or for a living. And happy Father's Day to my father, Bill McFeeters. I had a birthday yesterday too, so this is just a Juneteenth birthday and Father's Day. So and a national holiday now, so lots to celebrate. But let's get with it here, huh? Enough of that sappy stuff. Let's start rocking and rolling. All right, now we're feeling the vibe. Now we're feeling the energy. Go to everbullish.com. Click on investing articles. There may be a couple things that you see up here that look like repeats. They are not repeats, and I want to show you why. So we're going to get straight with it. Here it goes. Last week sucked. We don't say things as we want them to be. We say things as they are. Last week sucked. It didn't suck even necessarily from my perspective as a trader. It sucked from the reaction by the markets. And I'm going to bet that the markets do as they have been doing, which is rebound quickly. There is no reason whatsoever for banks to have lost over 20% last week. Well, that's in the leverage. So over, 12% last week. There's absolutely no reason for oil to be down or oil stocks to be down when oil is bouncing off of 5-year highs at 71 in crude. So I'm just putting this. Okay. Last week sucked, and we are going to take that information and we are going to exploit it, and we're going to make money this week, and we're going to crush it. And here's how. From a macro perspective, here's what's going on. This is just a reminder. The Fed announced that rates, and when they talk about rates, remember, it's the Fed funds rate. It's the cost of lending for overnight loans for banks to provide liquidity. It starts on the small end of the yield curve, and it's supposedly going to reverberate through. I don't think it will. I think we're going to be low for almost ever. I don't think we're going to see 4 or 5% rates for the next at least 20 years. We're going to do what Japan did. So that's an unpopular opinion, but that's what it is. That's how I trade. I trade on my own opinion. I don't listen to anybody else. Neither should you. So a reminder, rates are not going to be increasing. So that Fed funds rate will not be increasing, but they did, and they had to. Come on. I mean, this is an obvious thing. They had to say, all right, our target inflation was 2%, and now our target inflation is 2.10%. So we picked up 0.1% on the expected inflation, or not even that, the target inflation rate, okay? That is not a big deal. That's what we call a soft landing. We got a big airplane in the sky, and we got a lot of wind and a lot of turbulence and a lot of passengers, and we're on a time crunch, and we got to set it down. Well, dude, you just got to land it soft. There's no other way. The Fed is, I hate to say this, they are too intelligent, and they are too entrenched to be firing off anything like they did back in the 80s, which caused a crash, back in 11, which caused not a crash necessarily, or interest rate, inflation, but back in 11, there was for the first taper tantrum. It lasted for 3 months, all summer. It really sucked. It's not going to happen this year. Okay, this is not a big deal. And because it's not a big deal, we got Cartman in the back saying this is not a big deal, guys. All right, my hypothesis is the market will rally this week from a choppy emotionally week it had last week. And so I'm keeping last week's hypothesis on oil. ERX is at a buy point. DVN is at a buy point. That's Devon Energy. CPE cannot stop making money, so I'm not going to stop letting it. MRO is another good one. I don't have it on here. And then FANG, F-A-N-G, which is Diamondback Energy. Don't confuse that with the FANG stocks. It's called Diamondback Energy. Very similar to CPE, a little smaller market cap, and a lot more traders enthusiastic about it. And remember, one of the other Sherpa insights or tips, don't ever underestimate a stock with a cool ticker. Diamondback Energy, cool ticker, F-A-N-G, FANG. Diamondbacks and rattlesnakes have fangs. There's some psychology that goes into people wanting to buy that. And I like it. That's kind of why I want to buy it too. Okay, those are both swing trades. Those are both long terms. I like them for both. Hell, I don't care if you dip trade it. I don't mind dip trading it. If I'm bored on a Monday, maybe I'll fire at it. I like to trade on Tuesday mornings for my swing trades. So you got to make your own decision on that. And in Father's Day, you got to be your own father. You got to be your own daddy on that decision. But I'm just telling you where this is going to go. We're going to tell you where to hit the ball because the baseball field is shifted. I really like that analogy from last week. If you haven't seen it, watch yesterday's video or 2 days ago's video. Biotech, LabU and BIB. I don't like one. I do like one over the other. I like LabU better than I like BIB just because I've been trading longer, just because I'm comfortable with it. But I don't want that to mean that you have to use it too. We've got a serious, tight, kind of scheduled correlation that we've been seeing on that one. We had the health conferences this week. LabU held up a lot better than most. If you want to even add more traction and maybe not muddle your shares or muddle your bases, you can just buy both if you want to. If you already have LabU, you can add a little bit, double down. If you want to stay out of it, stay out of it. Try to pick it on a down day. You'll get 3 or 4% this week if you buy it at the right time. That's hard to say for most stocks, right? Hammer this. Hammer it, hammer it, hammer it. I want you to hammer the swing trade this week. At least I will. All right, another one. We got a semiconductor back here. I couldn't get a bigger picture because I'm done with technology, so I'm just going to zoom in. That's a semiconductor. SOXL, the 3-time semis will be up this week. SQ, Square, not so sure, but I like it. I like it, and I like its application to Bitcoin. It may not be a buy this week. I already own it. It may not be a buy only because the Bitcoin, the Square is starting to develop a correlation with Bitcoin because their idea is to come out with a hard digital wallet or a hard wallet. I shouldn't call it a digital wallet, a hardware wallet for storage of Bitcoin. This will make old people and people that are less adaptive to Bitcoin for security purposes be more enthusiastic about buying it. I think it's a great idea. Apple, Amazon, those are the two easy ones. Those are the ones that you can clip at least 1 or 2% on a day by buying at 9:30 and selling at 2:30. You're welcome. NVIDIA and Applied Materials. I was super impressed, super happy to say it. I'm going to brag on myself here. Go back and check the tape. It was less than 1 month ago that I said NVIDIA at $500, $580 will be at $650. It's at $7 right now. Analysts and price targets just came out. The most recent price target on that has moved up for NVIDIA to be $900 in the next 6 months. Double your money, follow the Sherpa. Super happy about that one. Kind of hardcore about that today, huh? NVIDIA and Applied Materials. These will be easy scalps. Easy scalps this week with a high degree of safety. If you're scared, if you don't want to bet, or if you don't want to if you don't want to bet, if you don't want to trade, or you just feel like getting a little bit in and a little bit out while you're busy with the kind of the end of your week or you're on vacation, whatever it is, check out NVIDIA or Applied Materials on any day. If they do open down, wait until about 9:30, 10 o'clock, buy it. Next, it'll hit 1 or 2% profit, scalp it, buy it again, scalp it again. These are very no-brainer trades. We may have a lucky day like we did on Thursday and Friday. If you're doing that and you see it go up 6% on Thursday or 5% on Friday, I think it was up 4.8% on Friday when the market took a complete dump. That's huge. Applied Materials is a correlated trade with NVIDIA. Obviously, they do the same thing. They do similar thing. Yeah, same thing. NVIDIA is getting a lot of pub. She's the pretty sister. Always go with the pretty sister. But in this case, you can also sprinkle a little bit to spread it out and maybe get a, wouldn't call it contrarian because it's a correlated trade, but you may be able to get a little bit more juice for that squeeze. You may be able to take her out for a cheap date. So, moving on. If you're timid, this will be where the easy money is. All right, let's look at the sectors from last week. This blew my mind. I'm a sector Sherpa. Y'all know that that's how I like to do this. This is the most consistent way over the last 12 years that I've been able to make more than acceptable and even extravagant profits. And that's just by taking severe notice every single week by doing this and looking at the sectors of the S&P and how they performed in relation to the other sectors and in relation to the S&P. I'm going to spend a little bit more time on this than I have in the past. Information technology was the only green last week. It was the only green, I'm going to repeat that, in the midst of interest rate, fodder, let's call it. A lot of people would call it interest rate scares. I'm not scared. Information technology was actually flat last week. The S&P was down 2%. Consumer discretionary, IT, a guy who told you that those always correlate? I did too. That was flat. That was down 0.07. So that might as well just be flat. Healthcare was 0.76. LabU, right? BIB, right? All right, communication services was down 1. That's a population-based thing. I have a whole theory on that we can discuss in the future. Real estate, roughly flat. Real estate went through the roof on the day that the Fed said that rates are going to not go up, but everybody was afraid of the future expectations hypothesis that rates would go up, and real estate did well. That makes sense, right? I'm going to speak on that a little bit more. It makes sense, but it also kind of correlates back to what the Fed said and what the expectations are. The Fed said we're not doing anything, and we're barely going to raise expectations and targets. The market said, "Ooh, no, oh my God, the wheels are coming off. You got a flat tire. You don't have a busted engine. Come on." So really either direction on that. I'm going to get more to that on one of my best bets of the week. Okay, consumer staples, don't care about that. Utilities, don't care about that. Industrials, don't care about that. Energy was down 5% yesterday while the price of oil hit a new high. The reason for that is that there's a negative correlation. Here's another Sherpa tip, a negative correlation between the price of oil and the strength of the US dollar. When we talk about inflation coming up, that means strength in the dollar, right? Or when people are afraid of inflation, there's expectations that there will be inflation, that means the dollar gets stronger, right? What happens with that is that since the barrel of oil is priced in the US dollar denomination, the numerator gets bigger, the denominator gets smaller, it costs less, right? So what's happening here in barrels in relation to the US dollar is that they still stay where they were, but energy was down. Real simple. No fear on energy. If you're scared, get a dog. Financials were down 6%. Here we go. This is another allusion to my best bet. These are the laggards. This is kind of the rebalance strategy that I talked about, but we're talking about this in the determination in the avenue of actually trading. And then materials are at the bottom, which is funny to me. I don't mess with materials, but materials being at the bottom and that far away from utilities, that goes back to the expected strength of the dollar. The same thing happens with oil, as does happen with materials, as does happen with palladium, as does happen with gold, as does happen with lumber, soybeans, pork bellies, anything and everything. Weather. All right. Bitcoin took a tumble. I'm going to take an L. I had GBTC. It was up 7% on Monday. You clip it, you get out, right? Well, I didn't clip it in time. I basically ended up flat on that trade. I did get out in absolute time to not lose money, but that was one of my best bets. It didn't work for you. Stick with me. That won't happen. I got a little bit too aggrandizing on that one. So my bad. It's what it is. It's the risk we take. I'm going to put it up here so I can have to eat my crow so I don't do it again. So I keep myself accountable. I'm going to pound GBTC this week. I did. But it was a lot of money, a lot of effort for no result. Not a negative result. Basically broke even, but still. Well, that didn't work. I'm bailing out. Lesson learned. Shouldn't have strayed. Writing these down helps me, and I'm sure that I would expect that it helps you too. So we're just gonna say, hey, I'm going to put that on ice. Maybe I'll put myself in the penalty box, but I'll trade it up for a couple of weeks. No matter what happens, no FOMO here. All right. Well, that didn't work out. Bailing back. Okay, sectors over the last week. This is a catch-up. This is a review. I'm sorry. This is the sectors over the last year now. Sectors over the last year. Communication, 40%. Consumer discretionary, 32%. Consumer staples, 16%. That's a risk-on market, right? When consumer staples, defensive sectors like consumer staples are not keeping up with the market, that means it's easy money. That means that it's time to buy. That means everything's on sale. All the prices must go Monday. Go buy some speakers in the parking lot because you got your paycheck, okay? Hammering that home. Financials took a big dive. Remember last week they were up over 50% over the last year. Now they're only up over 46. I'm jumping in. That's another allusion to my best bet. Technology, 38, still bullish. Materials, 43, still can't believe it. Real estate, 23. Real estate's probably going to continue to take off. I'm going to let it get a little cheaper before I jump into real estate. Utilities, I don't really care about it's up 8%, right? But most people buy utilities for their dividend payers. I have a whole portfolio strategy you can buy for $75 and crush that. Earnings calendar, don't care about earnings this week. I have it on here for you. Darden Restaurants is paying. Paychecks is coming. Plug Power on Tuesday might be a big one. I might even listen to that call. That stock is one that burned me back in the day. My boss wouldn't let me continue to trade that stock. It was pretty uncool of him to do that. Another reason I'm doing what I'm doing now, but Plug Power could be a good one. It's a good indicator on what's going to happen in the EV markets in the future. All right, here's the best part. Hitting that dab. FAS is down. If FAS is, this is the 3 best bets. I have 3 best bets this week. 3 best bets. If you want to trade on anything I said before, do it. You'll make money. If you want to trade and have a very, very, very high correlation and percentage of winners, these are the best bets. FAS, that's the 3-time levered on the financials. They got their ass kicked last week. FAS was down 20% last week. I'm betting the laggard. I'm betting it's going to come back. I'm betting that these expectations and hypothesis and all this madness and mess is going to be gone. If it's down Monday, I'm going to take half of the capital that I have dedicated to swing trades, and I'm going to buy FAS at the bottom. I'm going to try to find the bottom. I might even break it on Monday into 2 or 3 different lots, but I'm just going to try to catch the bottom. That's half of the money. I don't expect it to continue to finish down. If it finishes up, I'm going to hold. If it opens down on Tuesday, I'm going to take a large portion of the other half and buy even more. There's no way that the banks don't make money this year. There's no way that there's going to be that better of a time. This is a trap door. I'm going to go through it. This is just too easy of a trade. FAS is going to be a good one this week. It is going to revolve around timing, but that's why I'm teaching you all the lessons on timing. Yeah, got it here. This is the way you do it, guys. I'm passionate. I'm excited. I've done this before. I know what this looks like. All right, still bullish on last week. Get in if you haven't. This can be a long-term hold, a swing trade. I wouldn't use it as a day trade. So long-term hold or a swing trade. FTCV. FTCV is a fintech acquisition group. That means it's a SPAC. SPACs have been beat up. Now the dumb money's coming back into SPACs. And I like that. If you look at the trade behind the chart behind me, look at that. We've got 2 big spikes. It's at 12. It spikes above 15 roughly once a week. I don't mind putting some money out there waiting for that to happen. Okay, FTCV. They're the company that's going to take eToro public. That's supposed to happen sometime in September. On these, it's oftentimes better to buy the rumor than the news, or buy the rumor and sell the news. So that's what it is. I don't want to beat that dead horse too much. I think you get it. And then finally, here we are. Another best bet, another double-digit division dog, another move it all in. This is a risky one. If you're a risky person and you want to take some risks and you want to anticipate very serious high rewards, I got 3 choices that you can make here. UWMC, United Wholesale Mortgage Company. Going back to what I said about interest rates before, going back about the scares, going back about smart money going to the places that are laggards, also the SPAC conversation, and we're going to add on the Reddit army, the housing market. There's a Reddit stock now apparently, which I'm cool with. Again, I don't necessarily believe in all of that. I think they're a shill for hedge funds. I think hedge funds are really on the long side of all of these. That's another discussion for another day. The Reddit army is going to pump this thing potentially. The housing market's already pumping this thing potentially. Mortgage companies have some of the smartest people in the world on their actuarial side, and they are making sure that regardless of rates, they're hedged. They're going to make money both ways. And this is a SPAC, so SPAC money is coming back in. All right, that's 4 reasons right there to go ahead and jump on board. United Wholesale Mortgage also has warrants. I'm not going to go into the detail on this, but warrants are a lot less traded. They're more thin, but they also have bigger spreads. So the spreads from the bid and ask is a lot bigger. So these things can move up 20 or 30% in a day. I've done it multiple times. I haven't done it on this one yet, but I will. And so warrants are potentially what I'm looking at. And then the final option, thank you for sticking all the way to the end. We're going to get to the final option. But first, I want to thank everybody for being here. I want to thank everybody for deciding to take agency over their own investments. Everybody that's been joining the Ever Bullish Edge and the Ever Bullish Advantage and the Ever Bullish newsletter and the Ever Bullish podcast, and choosing to be ever bullish, choosing to always be optimistic, and choosing to take agency over their own investments as they would their life. I want to thank you. I want to shout you out. You're the winner here. I'm the Sherpa here. We're going to take you to the top of the mountain. I'm going to carry your heavy shit, and you're going to just have to walk with me here. Go buy one of my portfolios, the Ever Bullish One portfolio. Beating the snot out of the market. It's an all-stock portfolio. You can buy it. You can have, it's a Father's Day. You can take your dad's money and say, hey, Dad, Have you thought about firing your manager? Check out this other idea. Let's do this together. Now you're educating a person, you're teaching a man to fish instead of giving him a fishing pole, charging too much for the fishing pole, and then charging for the bait and the tackle and all the other bullshit that goes into a professionally managed account that you don't see, you don't know about, for the small reward of having an average fish. Ever Bullish Dividend Portfolio is crushing the market too. Ever Bullish Balanced Portfolio, buy all three, share them with your family. Support the Ever Bullish mission and take your lumps. $75. If you've never gone to a gym because it's a free gym, you start paying for the gym, you start going to the gym. That's the reason I charge for it. And I want to prove a point that I can manage a portfolio for the masses on YouTube with better returns, with less risk, and while educating investors at 1/10 the price of this Fidelity Contra fund. That was a drunken conversation I had about 5 years ago, and now we're doing it, baby. So thank you. That's enough. All right, you waited. Let's scroll down all the way to the bottom for sticking through this 21 minutes so far discussion about the markets. UWMC, August 20th. So the monthlies on UWMC, United Wholesale Mortgage Company, calls with a $10 strike for $1.07. If you can get these cheaper than $1.07 at some point this week, particularly on Tuesday morning around 9:40, go ahead and buy it. This is a very, 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 very high risk trade. This is a very, 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 very high potential reward trade. This small dip in the market where the printer stopped running for a quick second is either going to boom us, but we're not going to let it bust us, because what we do is we set limits below it. This is the type of risk that is necessary to be a professional trader. If you're not familiar with options, remember, I gave you the idea of buying the warrants that are a little more levered. And if you don't want to do that, happily, easily recommend to you, consider buying the just the regular UWMC. All right, I'm losing momentum here. I'm going to put on a little bit more Zeppelin for the outro. I thought I was. I guess my iPad's dead. Just picture some Zeppelin in the background. Chase, Ever Bullish, AFG, LFG, LGR, let's get rich. Thanks for watching. If you want to stick around for a tiny bit more, I'm going to give you a couple gambling bets. I decided to talk about wagering on this podcast and YouTube channel as well, against the advice of some of my more professional clients. But I really don't care, because this isn't about being professional. If I wanted to be professional, I'd still be wearing this suit. But download the Ever Bullish One podcast, available on iTunes. Do it through Ivy.fm, which is a company that I'm associated with, and it is a company that is going to blow up. It's an app. You can download it, a free app on your cell phone. It's the best way to search for any podcast guest, any movie, any book, anything, based on its search capabilities, to find guests that aren't necessarily tagged or topics that aren't necessarily tagged in podcasts. And come on, let's just keep doing this, baby. This is actually working. I never had a doubt. Buy me a cup of coffee. A birthday cup of coffee would be fine. And even if not, share it with a friend, share it with a stranger, share it with a neighbor. I know you see the value. We're going to get through to the investment industry, and we're going to make sure that they can't continue with the status quo that is severely antiquated. There's no reason to pay as much as you have in the past. There's absolutely no reason to not at least have a little bit of knowledge of what you're investing and how to trade, because this is a viable resource for thousands and thousands of people. And in a gig economy, it's foolish not to invest in yourself. Chase, Ever Bullish One podcast, the YouTube portfolio manager. Buy one of my portfolios, buy me a cup of coffee, just leave a comment, just say thank you. Give me some feedback if you're not feeling what I'm talking about, and I'll evolve. All right, here's the deal. U.S. Open final round today. I love Oosthuizen. I got it for plus 450. So Oosty pays 4.5 to 1. I think the books are probably updating this morning. I also like, so who do I have? I have Oosty. I have McIlroy. It's very unlikely McIlroy goes out there and puts up another 67, but if he does, I'm with that. I got McIlroy at plus 300. I do have a plus 1,200 on Russell Henley, Bland. And Bland is kind of the tin cup of this, so there's no way he's going to win it now, but I still have that one sitting out there, so we're going to consider that lost money. And then Russell Henley at plus 600. None of those guys are the leaders, but those are the guys that show up on Sundays. So if you follow those and any of them win, you're going to have the bets paid for. And if either Usti, Henley, or Bland win, you're going to have over $1,000 extra to party with. All right. That's what I got. Chase Ever Bullish, Stock Sherpa on YouTube. Longest video ever. Thanks for sticking around. Thanks for being a part of the squad. I will remember my OGs when it comes next year to the Ever Bullish One pricing. It will remain $75 for all Ever Bullish portfolios will remain $75 in perpetuity for anybody that stuck with me this year. I'll email you a promo code at the end of this year. And outperformance, baby. Let's keep it up. All right, come on. Have a great week. Have a great Father's Day. Spend some time with your family. Enjoy life. We'll see ya. LGR.